Welcome to the program. I'm Mark Imperial. This segment's being brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done and published to educate consumers, grow their practices, and to leave a legacy. I'm doing a series of spotlights on remarkable business intermediaries from across the country. And joining me on this segment is Michael Wildeveld. He's the founder of Veld Mergers and Acquisitions. Michael, welcome to the program.
Morning, Mark.
Michael, tell us a little bit about your work and specifically what types of clients do you specialize in helping?
It's an interesting one. We brought ourselves in all types of clients. We've been doing this for 20 years. We focus on sell-side business sales. We started off with larger companies, then we went down to Main Street, and now we're back with services for both Main Street sellers and M&A sellers. Veld Mergers and Acquisitions typically focuses on 3 million plus in EBITDA or profit. All kinds of industry segments all across the globe. Say if we've done 1,000 plus transactions, probably 800 would be on the Main Street side, 200 would be on the M&A side.
Gotcha. So tell me a little bit about the differences with those types of buyers. Are they really experienced sellers as well? As a lot of people I know in Main Street businesses, they've been cranking away, thinking growth year after year. Do they think about selling?
The challenge is the vast majority haven't given it enough thought. You really should start your exit planning about 2 to 3 years in advance, putting together your deal team, getting your balance sheet in order, and really locking down those drivers of company value. For most sellers, it's an afterthought. They'll come to us and say, we want to sell within 6 months. Some will say within 2 months, and we tell them it's too late. You've missed the boat. We can still help you, but it's gonna result in a detraction from value. So the ideal clients are those that come to us a year plus in advance, ideally even 2 to 3 if we're setting up trusts or if we're putting different policies in place to really maximize their value and minimize their sellable proceeds. The capital gains tax that sellers face oftentimes can be mitigated. They just don't realize it, and it takes proper planning in advance. But when folks do come to us, we work with them, given whatever stage they're at, to best assist them from that point forward.
Yeah, part of the inspiration of this entire series is just the lack of information or misinformation out there, and really shining a spotlight on the actual value of working with the business intermediary. Because a lot of folks, they don't really even know it's sort of the help is available. Is that right?
The vast majority don't. Part of the reason we focus on the segments we do is that there's a great knowledge gap. The owners of companies, let's say under $20 million in enterprise value, tend not to be nearly as sophisticated. You alluded earlier to the level of buyers versus sellers. Buyers tend to be extraordinarily sophisticated. It's not the first time they've done it, and they know the ins and outs and they know the valuation metrics. Sellers have no idea. So they come to the table, unfortunately, very ill prepared. They've heard stories about the types of multiples they can get for their business or what it should sell for. Usually it's terribly off. And then they'll have expectations that aren't in line with the market. The buyers, of course, are able to capitalize this, take advantage of a lot of the smaller business owners. That's part of why they like them, but it's also part of why the deals are so challenging. You're not going to see bigger M&A shops or boutique firms really trying to focus on this marketplace, just because it is a more complicated and difficult one to manage, given the disparity in levels of kind of knowledge base and financial sophistication.
Can you give us a snapshot? I know it's kind of a broad question, but can you give us a little bit of a snapshot of like the types of services and the value that you bring as a business intermediary? In what areas do you help these business owners sell their businesses?
Mark, you would be amazed. We're everything from your psychologist to your financial analyst to we're not CPAs and attorneys, but we're going to go through all your contracts and all your financials. So it really depends on how the client comes to us and what they have available to allow us to help them. But typically the first step is going to be an informal valuation. We've done over 5,000 informal valuations. We're also a certified valuation firm. So we've done over 300 certified proper valuations. Those would be extensive. We don't require anything to work with us. There's no upfront fees. There's no valuation necessary. There's not even retainers. We try to make it really easy to onboard. But the first step is going to be to evaluate the business, determine if it's even sellable. And then if it is sellable, at what price or what price range could be achievable. And unless you have a meeting of the minds you're never going to have or accomplish a successful sale. So that's really the first step. And that might take, going through the last 3 to 10 years of the company's financials. That would be its, income statement, balance sheet, cash flow statements, anything else available. But really, apart from the financials, it's working with the owner to understand where they're at in their life, what their retirement looks like. Now we become kind of financial planners and even wealth managers, where we're seeing this is what you need to exit successfully and have the lifestyle that you've grown accustomed to. This is where you're going to be at, maybe from a tax standpoint, and this is what are going to be your final net proceeds at sale. And if your company isn't ready to achieve that, these are the measures we need to put in place to control the levers available to us to maximize that value. And that could be, instilling recurring contracts, mitigating risk in the company's business profile, in their customer base if they have concentration, or if they lack proper corporate measures taken, let's say corporate governance, to really offset the company's inherent risk.
For a lot of these Main Street businesses, since selling is sort of an afterthought, people are just going to go to Google. And so the internet is a blessing and a curse, of course. There's a ton of information and some confusion and misinformation out there. You mentioned valuations, people kind of confused about the multiples. Is that the biggest myth or misconception you hear often, or are there others?
Mark, I hate to tell you this, but there are myths and misconceptions at every turn in this game. We'll have attorneys that we work with that are sophisticated in their individual practices. The challenge is they might exist in a silo, right? And they understand their practice. They'll advise a client. We just had this last week to say, go to all of your competitors, tell them you're thinking about selling, and you don't need to hire an intermediary, to bring in or run a process and bring in a vast pool of buyers. We'll see if we can accomplish a sale quickly with your competitors. Oftentimes that's the worst thing you want to do. So there's myths in every aspect of it. And it's because, you mentioned everyone could go to the internet. That's part of the problem. Data is readily available. However, I could count on my two hands the number of intermediaries that have done, 1,000+ transactions. So while there's a lot of data out there, that doesn't mean it's accurate. And there's not a real litmus test for extraordinarily qualified intermediaries that are experienced. So, there's the academic version of, let's say, valuation or the M&A process, or, from an attorney standpoint, we love the attorneys that say I've done 500 transactions, but really they authored or reviewed contracts for 500 transactions. We've run the process from get-go, positioning the business, taking it through the sale process, identifying the right buyers and or marketing to those buyers, determining where's the best fit, looking at the holistic picture of the company from a valuation standpoint, a long-term enterprise value, what's gonna make the most sense for the seller and their post-sale lifestyle, and then also from a tax standpoint. So it's a lot more complicated, and there's a dozen disciplines that could be involved in any given transaction. The internet is highly misleading. So
Yeah,
you read you heard about the multiples, or you mentioned multiples. Multiples are a curse. Everyone has confirmation bias, so they've heard a story about a competitor selling for, 8 times multiple or a 10 times multiple, and the sellers first get it wrong, whether it's net profit, EBITDA, seller's discretionary cash flow, or worse yet, gross revenue. And multiples are simply easy rules of thumb. But with the confirmation bias, everyone, of course, believes they have the best looking baby. So they're going to go along with that highest multiple possible, not realizing that metric doesn't apply to them. And usually in our business, I mentioned the size of companies we deal with. When you're under, let's say, $2 million in EBITDA, you have a tremendous detraction of value. And that's just a function of your size and your risk profile. So a company's risk could be thought of as a cap rate, or you could apply a beta to that company's risk. And if you apply that to their cash flow, that's going to show the value of that company from an investor standpoint. In institutional investors, private equity groups, sophisticated corporate investors, they're not going to touch something usually under 2 million in EBITDA, because frankly, it's not worth their time. It's not worth the transaction costs. And the juice isn't worth the squeeze for the amount of time and effort they're putting into it, given the risk. But buyers or sellers don't see this. They hear the multiples. They think their company doing 500 in profit fits that profile, when in reality, the profits might be hidden in tax mitigation strategies of their own, however creative. And that's not the same as having audited financials, a quality of earnings report, contracts in place, and calculating a true GAAP-based EBITDA number that is clean and traceable.
When you mention that bad advice of hey, you could just sell it on your own if you do this, that just raised a red flag to me. Like thinking that brings up the whole subject of confidentiality, doesn't that? Isn't that a huge red flag when you announce publicly that your business is for sale?
That's the last thing you ever want to do. Confidentiality is key. Even if you are sharing the opportunity just with a few competitors you might feel comfortable with, you not only want it still to be confidential with an NDA in place and proper strategies to manage the process, but more importantly, you need leverage. So if a seller goes to a potential competitor directly, they lose all of this leverage. I'm dealing with a $30 million sale right now. We went into it as a $60 to $100 million sale. And then as we peel back the onion and we find out that there might be a few more warts on the opportunity than we either knew or thought about. And it turned out when we thought the gamut for this buyer pool was about 100 companies that we discreetly reached out to, we realized that it was about 4 companies that could really bring it forward, given the wherewithal and given the relationships in place. And 2 of those 4 companies were $1 billion+ enterprises. 2 of the 4, one wasn't $1 billion+, but it was still public. 2 of the 4 were public. It really decreased that buyer pool. But then when we were able to really assess the company and see who the potential buyers were, we're able to create, what you'd call an auction, a limited auction, where we go to those parties, we show them what we have, we show where the value is, not only to the owner, but we try to illustrate this is what the value also is to the buyer. It's something that they don't have, or a market segment they neither are in, nor, despite them being $1 billion+ company, that they could get in, given the intellectual property in place, the know-how, and the relationships. And you want to turn the table on the market. A seller is never able to do that, whereas an intermediary can. And the same holds true for a small company. So that was we thought $100 million sales turning into a much smaller one. But on the exact inverse, we could be dealing with $100,000 Main Street business sale, and the same principles hold true.
Fascinating insight. Michael, what inspired you to become a business intermediary and to get into this field? How did you get started?
Kind of fell into it like so many folks, but mine was my path was a little more direct. I started my first company at 18. It's a maintenance company in Southern Nevada. I grew within a year to 35 employees. We had accounts through Southern Nevada Valley, and I had actually worked with the company, handed it off to my mother, and saw it fail within 6 months, just from a management standpoint. And I saw all this value that I had created disappear. As you look at the marketplace, you see this happen with a number of small businesses that aren't able to successfully transition. And you say, why can't they successfully transition? And the reality is they're just not equipped to, and they don't have the know-how to. So I went from the path of that as one entrepreneurial venue, and then a number of them afterward, to doing a corporate route of finance, internal audit, M&A with GE Capital, Universal Pictures, a few other big name brands. I worked in marketing and business strategic development for both Virgin Entertainment and Universal Pictures. And I went through an MBA program. I came out. I didn't want to be an investment banker. I didn't want to go to Wall Street. I wanted to help the small mom and pop entrepreneur. I knew that the baby boomers were going to be retiring. Most of them were going to need assistance, kind of like my mother didn't have, or we didn't have in that venue. I'm a natural helper. So it was a segment that we gravitated toward, or I gravitated toward, first with consulting services and valuation. And then we migrated into business sales. And that was a function of doing valuations for a number of these smaller companies, watching them go to market and seeing that they weren't able to sell for what we thought fair market value for them was, and then analyzing the marketplace to say what's going wrong with small business sales and why aren't these owners able to transition? And then we're able to figure out how to help them transition better than everyone else.
Really impressive range of experience. Michael, for folks listening now, business owners, Main Street business owners, or otherwise that are considering selling their business and would like to speak with you, how do they find you, connect with you, and learn more?
We're easy to reach. The Main Street practice, let's say for businesses generally under $3 million that you'd have an owner operator that runs them, that would be theveldgroup.com, TheveldGroup.com. Then the more sophisticated companies, not necessarily due to size, but maybe complexity, intellectual property, or really if the buyer is going to be a private equity group, that would be Veld M&A, and that's just veldma.com. Anybody in the company can help everyone. We're interesting in that we have 4 best friends since the 9th grade working together. 2 of us are kind of part of the core team, extraordinarily active. A third of us is an accountant, professional evaluator, and we're all blessed to be able to work with our best friends for 30 plus years every day.
Michael, this has been terrific. I really appreciate you stopping by and sharing your insights. They were fantastic with my audience today. And I wish you continued success with you and all of your clients.
Mark, we'll look forward to it. Hopefully we can talk more in future segments and explore further to help folks that are in the market.
That was Michael Wildeveld, founder of Veld Mergers and Acquisitions. And this segment's been brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done and published to educate consumers, grow their businesses, and to leave a legacy. That's all for now. I'm Mark Imperial, and thanks for joining me.